Welcome to TradeTheABI.com. This is John. This reports for the 20th of March, and as we've talked about before, above the ABM yellow, positive, and that pushes us right back towards the highs. No surprise. Magenta got back over yellow. Slight increase here in the short interest for today. It wasn't from yesterday, so we'll see if that continues. But as long as bulls have the reins on it, no issue. Still rising gold from an MBI checkout readings here. So a crossover here of cyan below green on the DOC, and you're really going to have a strong push to new highs. So everyone's waiting for Fed discussion and how soon they'll cut rates, as if they're going to, and their inflationary target, which has been creeping up, as we talked about well over a year ago, that they would just, instead of the 2% target, just keep raising it a little bit to try and get it closer to what realistic expectations can be. From an NQ standpoint, just above the 76%, so you can see it's lagging, but also improving from its readings as well. So all that looks pretty consistent. That doesn't mean that you aren't going to have a lot of volatility here, given the announcement. Treasuries at the bottom side here, and this is the real question. If the Fed isn't going to do anything, you can expect rates to rise. But if they feel that that's going to be shifted to election, softness, then we're definitely going to see dip back down. So that would cause TLT to rise there. So we'll keep an eye on that. But I would expect that there's going to be some disappointment in what's discussed with oil. Where it is, inflation is going to start increasing even more than it did before. And we already saw at the beginning of the year, even with the adjustments that they do, that it was still out of control. And of course, that oil situation, we talked about what that will do to the euro, as well as other currencies that have to trade for dollars to buy oil. Doesn't affect all those ones that are trading outside of it, which is going to start having a growing impact over time, particularly as the Russia conflict and that gets closer to an endpoint, which probably towards the end of this year will definitely be at that stage. From a gold standpoint, softening just break down here to the 76%. Of course, if the Fed gets softer, I would expect gold to pop, as well as salvation for your crypto setups. But from the crypto standpoint, I see it's a big thing, just filling in positive extremes. So we've gone pretty much all the way back. Um, just to about this level right here. So that just leaves a couple more from the original breakout. And oftentimes that first one isn't going to get filled, but that would make sense to move to the 50%. But if there's weakness from the Fed, then I would expect that it may not even fill that. Now, ETH has filled quite a bit more, as you can see, come down and filled the full amount of positive extremes. And so that's an interesting one, because that differential right there could be enough to start propelling the class back upward. And as we talked about, we reached the bottom, came up, they filled it all the way back to take out the positive extremes, which began right here with this bar, filled it back in beautifully. Gotta love that. And then started it again. Rinse, repeat. You'll notice, though, that the new repeat, though, is not under positive extremes, so that becomes relevant. When we look at it from an intraday standpoint, it was all rosy from the moment the open took place and just never abated. There were a few just soft spots, but nothing special. They haven't even done much to fill back in the post market here, because again, everyone's anticipating Fed, and that will be a key determiner. It would be shocking to see them go into a softer stance, because how can they? But logic has never stopped markets from doing interesting things. So we'll keep an eye on it, but the expectation would be a disappointment for the market. I think that the Fed is likely to hold course at this particular time, because there's no real reason to do anything differently. Things are plugging along, not great, not horrible, but with the deficits and everything else, it's just problematic, because they need to make that cheaper. But actually, if they just didn't spend as much, that would work too. But they see this as an endless model where they can just keep adding to the debt. It makes no difference. Um, And it's kind of an interesting thing going into tax season when you're spending these kinds of extra trillions and just creating it from nothing. What do they even collect taxes for? So strange stuff. Regardless, we'll continue to follow the readings and just go with what is this particular time in the short time frame. A little bit of softness exposing itself right there, but I think that again, that depreciation also adds to the increase in the value, and I think that's just something you have to appreciate, which sometimes is counter to what you might expect, given the fact that it's a drag on the economy, but it has been so much of a drag that things have stopped, and that's the balancing act. Try and stay ahead of it before it completely falls apart. As always, though, anything relevant, I will certainly put it up there, and I think we can look for a lot of interesting action coming in through the rest of the week. I think this is going to be the beginning of some exciting stuff. We've already seen some pretty good action so far for the beginning, as expected for the start of this month, and we haven't even started real electioneering yet, so that's going to really add to it. As always, though, have a good one. Trade well. We'll talk to you later.